Yeah. I like when these kind of things happen where like everyone's attention is just to one thing, and you feel
Yeah.
like there's something big going on. Hello and welcome everyone to another interview with one of our FTMO traders. And today we're talking to Marc from Montreal in Quebec, Canada. Hey, Marc.
Yes, sir. Yeah. Hey. Nice to meet you, man.
By the way, for those of you who might be watching us for the first time, FTMO is a modern prop trading firm, and we're looking for traders who can pass our evaluation process and get to manage our demo FTMO account. So, Marc, again, welcome. When I was checking your profile, I noticed that you started trading with us in 2021. Since then, you've come a long way. Like in payouts, you received over $100,000. So congratulations on that. Big congrats. So can you give us a little introduction on yourself and on your trading history?
Yeah, sure. Yeah. So I started, and I have like a long story, and it's funny my story. I started in being interested at trading around like 17, 18 years old, which was roughly probably 10 years ago almost. So now people know my age. uh, I started like learning trading because my granddad was an accountant. He was actually pretty good in the stock market, so I was more in the stock market kind of side. Always very intrigued at trading. I was seeing a lot of videos online about that stuff, but I was more on the stock picking kind of side. So was interested. Didn't have too much time. Went to university. Did the full like typical finance background. So did university in finance, work in wealth management for different big banks in Canada, worked for investment managers in Canada, did the CFA level 1, 2, was going to do the other levels too, but I started making good money on different sides. So I quit that project. Maybe it's on the ice for now. Maybe I'll do it later. But I started trading actually during COVID a lot because COVID was such a weird period and markets went down so much that I took roughly $25,000 of my own money. I transformed that over 600,000 in 1 year, and from that I left the corporate world. Did that after for a while. Didn't know about FTMO actually. I didn't know about prop firms that much. For me, it was just more for fun than anything else at first because I was like, I don't really need that money. So I started, yeah, as you said, around 2021. Didn't really take that seriously at first because I was doing pretty good with my own personal capital. But I saw potential. I saw that the prop firm industry was getting more and more recognition. So I was just trying to focus on that. And yeah, since then I've just been focusing more and more on the TMO, especially this year. And with my own capital, I do trade still, but mostly investing nowadays.
Mm-hmm. Okay, so you mentioned you turned 25K to 600K. So did you use your knowledge from the past from the wealth management, or where did you start with
Yeah,
okay,
that's a
how
great
am I gonna do
question.
it?
To be fairly honest, that was my best year ever. Never did that after that. I mean, I think I had a good strategy for sure, a good risk and emotional management, but for sure, I think COVID was just such a unique period. The markets were pretty easy to trade. It was just really, really, I think it was a good strategy with a mix of luck, but you see, I think luck turns on you over the long run. So, I mean, you do need some good pillars. Uh, I would say the best part of my strategy is mostly fundamental. I love reading about financial markets. I mean, for me, I think it's more important than technical analysis by far. So I'm a big believer that you need to understand what moves market. Like, you know, like when you have FOMC and all that stuff, you need to already be prepared different scenarios for. So I run trading in two different ways. You have fundamental who's running the show, and you have the sentiment. Sentiment and fundamental is two different things. You can have news, but news sometimes can be good numbers, but they can be actually bad for the market. So the sentiment can turn negative even if the numbers are good. So you have to understand those two aspects, and after it's all about probabilities. So if you have those and those scenarios, which one is the most likely of happening, and after you get prepared with your technical analysis on that part. So yeah, I mean, my trading experience really got better for sure with running working on those firms. I was pretty lucky. I worked with guys managing multiple billions of dollars and Montreal. So just seeing the way that they think, the way that they approach markets, and especially the way that they manage risk was very, very eye opening for me.
All right. I really want to talk more about the fundamental part of trading because usually what we see here are people who use mostly technical analysis, support resistant patterns, stuff like
Yeah,
that.
yeah,
Rarely, really rarely, we have here someone who relies mostly on the fundamentals. So,
yeah.
could you give us like some of the highlights or the few most important points about the approach to the fundamental analysis? Like, do you look at commitment of traders report? Do you check the regular news that we see in Forex Factory, or do you see some other stuff as well that maybe people might be forgetting about?
Yeah, that's a great question. Uh, yeah, so I look at a few factors. Okay, I'm a big believer that it's funny because you say that most people do use technical analysis. It's true because it's sold as an easier way of trading actually. But if you look at a bank or anything like that, it's important to know what you actually trade and why things are moving a certain way. I mean, yeah, you can do technical analysis, or you can do like scalping, but scalping is I'm not going to be good at scalping because most algos are going to be quicker than me. So why would I do scalping in that case? For me, I think fundamental is important. So the way I do it is I don't look at commitment of traders. I never do because I've never used it. So what I look is mostly correlations between assets, and I'm going to look at certain factors. So I'm going to look at the VIX pretty much every time.
Hmm.
I have three ways of seeing the VIX. Okay, so if the VIX is between 18 and let's say 14, so 18 and downwards, for me is that we're in a typical risk on kind of market. Okay, so risk assets are going to do well most of the time. If you go between 18 and 20, for me, that's the transition phase that I'm like, oh, what's happening? There's maybe something, a risk element, maybe a news, maybe it's going to be fundamental driven by like employment numbers, inflation numbers that's starting to like maybe scare the investors. Okay. And after the second you're over 20, for me, it's like really careful. There's might be something that's about to explode pretty soon, and maybe markets are going to go maybe a bit lower on the equity side of things. Okay. But the important part is I look at this. I'm going to look at also at the fear and greed index that's
Hmm.
been created by CNN. I look at this too, not as much as the VIX, but I'm going to also look a lot when news come out. How is the overall market reacting? So let's say I look at the last inflation reports, or all like today we have like FOMC, for example. I'm going to look at the 10-year bonds, the yield on the 10-year bonds, the US market. I'm going to look at the DXY, which the aggregated of the US dollar. I'm going to look at gold, and I'm going to look at equities on that side. So it's pretty easy to see if like let's say there's because market this afternoon are pricing already that there's going to be a cut in rates. That's not a surprise. So the real picture, the real thing that you really want to see is what's going to be the Fed's speech at 2:30 this afternoon,
Hmm.
right? So in that case, between all those correlations, let's say I see that there's bid in the US dollar. Well, if there's bid in the US dollar, it's most likely because people are seeing that the Fed is more hawkish than it used to be. So in that case, I'm going to look at where that DXY and those yields could potentially go on a technical level. And once we reach those levels, I'm going to see on the charts on the indices, is there any technical level of maybe rotation in those markets that could be aligned with those same levels? So once I have those rotation levels, it's easier for me to understand if the picture or the risk or the readjustment in the markets is fully priced in or no. Like another example I can give you is like it's important to understand when it's fundamental. People think all news are very important, but from my understanding, not all news are always important when it comes to economical data. So I have like three spheres. Let's say I have the sphere of inflation, I have the sphere of employment, and I have the sphere of all economical macro data that's been published.
Hmm.
So the way I see what's the focus on the market by the market is to always look at the Fed statement, okay? Because at the end of the day, what's moving markets? Yeah, you have financial results, especially on the. I'm really talking about equities right now, so indices because that's what I mostly trade. So yeah, you have definitely the results from earnings from public companies, but at the end of the day, what's even more important is the monetary policy by the Fed. So the second they pump money in, the second they get rates lower, that's how they create those crazy, crazy returns the past years. It's because they just print money out of nowhere. So I always look at the Fed statements. Okay, are they really pushing more that they're focusing on inflation, employment, or just global data about the
Mm-hmm.
U.S. economy? So lately, since I would say end of August, end of July this year, what I've seen is that it was mostly about not inflation anymore, but mostly about employment. Okay, so you have the jolts that were starting to really tick lower, and after you get those revisions during that summer, like those revisions started to happen. So they were like, oh, actually, non-farm payroll for last month was revised down to 30,000 instead of like 200,000 new jobs. So those revisions really started to make the Fed panic. So I knew since that moment that all of the employment data was really more the focus than the inflation data.
Mm-hmm.
Okay, so once you have CPE, PPI, or CPI coming out, yeah, I do pay attention to it, but I know it's not going to be as market moving as the employment data. And that's the important part I've seen is that a lot of people are, what I've realized that when I started is that I thought that inflation was always important, employment was always important, which I realize it's not always true. Some data is more important in time to time.
Mm-hmm. Yeah, yeah, I would agree that in different times, different stats are get more important, right? So in certain periods, in certain years, the employment might be more important than the years after. By the way, a little question that just appeared in my mind. What do you think about the Japanese bonds that now I think the 10 year
Yeah,
bonds
that's
are
a
at like
great
4%.
yeah, that's a great question. The bonds, actually, I've been following that story for a month. Some people, it's so funny because when you talk about trading in financial markets, like it's fear mongering sells a lot more than just like optimism. So when you look at your Twitter account or your X account and you look at those posts, a lot of people are going to just write article about oh it's the end of the world because the bonds are spiking and the Japanese bond are spiking. Uh, I don't think it's going to be the end of the world, but a lot of people are going to do some fear mongering and just sell clicks because it's easy. And I just want to jump subject quickly. You know that there was like lastly, like we had like a downturn in the equity market, so the indices in the U.S. because people were scared that there was an AI bubble.
Yeah.
A lot of people were saying, "Oh, there's AI bubble," and a lot of fake news came out about Nvidia with their sorry, it's the receivable accounts. So they had like receivable accounts, and they were saying that the numbers were pumping higher, and the numbers were so high. And I was like, this is sorry the word, but it's scrap. It doesn't mean anything. Like revenue went up like 70% or 60% ish. So of course these account receivables are going to go higher. But the way that they were formulating the sentence, and I saw this article like 10 times on X in 1 week, and people were like, "Oh my god, that's a sign that the bubble is it's going about to explode." It's just fear mongering. So I think a bit of the same thing is happening with Japan right now. Uh, I think it is important, but for me, I don't think I'm going to turn negative on the markets because Japan is are having higher yield now. I think I'm going to wait to see is the Nikkei actually correcting. And
Mm-hmm.
if you look at the indices there and the Japanese indices, they're doing pretty well right now. So I mean, are people actually really pricing in the fear of like a financial distress situation there? If I look at the Japanese market, I don't see much. So until I see something really dangerous there, I'm gonna stay optimist as much as possible. But it's for sure important to see because most people, what you have to understand is what I realized that a lot of people are do carry trades with the Japanese yen, so they just borrow that money there, they invest it somewhere else. So of course, if you have a lot of leverage there, a lot of people are probably going to have to close some of those leverage position and just pay back that debt. So maybe there's going to be some money coming out of the U.S. bond market, or I don't know. It's going to be interesting to see.
All right. Yeah. Well, I think whenever you are reading, people posting, especially on Twitter and pretty much like in the media as well, you gotta just count on the fact that people just like sensations and they are
Yeah,
looking for like crazy information, and people just like to be in the state that something big is coming, like a
yeah,
big recession. So
yeah.
so I think you gotta approach these people with some sort of a
It's like
distance.
Taiwan, like we could quickly speak about Taiwan. Like so many people I know, like, oh my God, Taiwan is going to get like attacked by the Chinese and all something. Like, what do you mean, man? It's been like a subject of like known for years. Nothing happened. Yeah, maybe it's going to happen, but are we going to live in the fear of this situation actually happening when it hasn't happened yet? I think it's to take with a grain of salt.
Okay. Now, well, let's take it a little bit more to the trading itself.
Yeah.
So, from experience, when I know some traders who trade mostly based on the fundamentals, they are usually swing traders. They hold their positions for a few days. How about yourself? How long do you usually hold your trades?
Not much. That's the weird part. Okay, what I've realized is that I do like fundamental because I really like reading about that stuff. But I for me, there's two ways of doing stuff. It's investing on long term, and I have my portfolio long term investments. I don't touch it, even with all of that macro stuff. It doesn't really affect me. I really base myself on the company fundamentals. That view I have, the macro view I just like said right now, or whatever. Okay, I try to use in my trading, the fundamental part. I'm going to use it for like days or weeks, but I'm not going to stay in those positions for weeks or days because my personality just doesn't really fit with that. I've tried. It doesn't really work for me. I don't know why. Maybe I take too large positions and it just really doesn't work with the way I feel. So I prefer taking like large positions, which are okay risk manage. I would say like the best I can. And after once that position doesn't work, sometimes what would happen is I will retry that same vision and I will retry with maybe the better price entry. If this one doesn't work, I will sometimes retry because I do have the same fundamental view. And sometimes the problem with that thing here is that sometimes you can be wrong 3 or 4 times before getting right, recouping all of those losses. So that's the way I do it. I don't really swing trade that much. Sometimes I do, especially in commodities, because commodities are used, especially crude oil. So I do like trading crude oil on swings, especially right now with Russia and the peaks deal. So I find like there's more upside risk to the price of crude oil. So on that case, like commodities, I will do it. Or sometimes I do it on equities when we have really nice corrections, like 10 to 15%.
Mm-hmm. Just a little question. Do you remember when oil went to zero, to negative, actually?
Yeah, I was actually at the office at the bank that day, and I was like, "Holy shit, man!" I was like, everybody was yelling at the office. We're like, "It's the end of the world!" I was calling my parents. I was like, "Oh man, it's the end, man. We're finished right now." I'm like, "We're buying a cottage in the forest. Like, COVID is gonna eat us." I was panicking. It was like first week, I think.
Did you take any action? Like any
uh,
trade on your personal
yeah,
portfolio?
yeah, yeah, yeah. I did back then. But I didn't even make money. That was the most stupid part. I actually lost money on that trade. I was learning about trading back then. I was still like a rookie at that stuff, and I bought some leverage ETF uh, on crude oil. But the problem with those leverage ETF is that they have like a lot of contango. So when the price of the future moves and the price of the S, because like they it's like a swap product. It's not a real product. You're not buying the crude oil itself. You're buying like a product that replicates the price of crude oil.
Mhm.
And even when the price went up, my position, I don't know why the price didn't move in the same direction. So I actually ended up losing money in that.
Okay. Last question before we move on to the next part. So, how about day trading stocks? Have you ever been doing that, or do you use stocks only for a long-term investment?
Yeah, that's a great question. Um, I do both, but mostly investments because I like reading about companies. For me, companies, it's not because the stock goes down today that's a bad company. It's really more about long term vision. Sometimes I will do stocks when I see great value and I think that just the price went down way too much, uh, I'll do it. Like large cap, like I did recently, stock like Tesla, Oracle, Meta, uh, all of those big names. I will do sometimes. It's like certain trades. So I will add to my long term position, but I will add leverage, technical
Mhm.
leverage, and I will just get a very good entry with that, and I will keep that position maybe for a month or two in that case.
All right, cool. Well, Mark, thank you for the introduction, and let's move on to the next part. All right, so here we are with that silver loaded up on your chart. So, if you could guide us a little bit through your trading. So, do you have any trades prepared?
Yeah, so I do want to share a trade I took actually last night on silver. Think silver is actually in a great spot right now. And I just want to mention one thing quickly. So if you look at the watch this year, the way I do it is I have like indices. I do have that thing here. It's to see if there's like a over positioning in QQQs compared to SPY. I have my ETF too here just to help me out. Because sometimes I do look at option calls, option walls on those Qs, on those spiders. Uh, After that, just quickly, so I do a lot of correlations. So I have gold, silver year that I'm going to link always with DXY in 10 years just to see how all the things are reacting. And after I have US oil and UK oil to help me out, okay, if there is like any geopolitical risk and there's like oil country that's going to be linked to that, normally oil is going to go higher and metals are going to go higher too. So it's easier for me to see if we have geopolitical risk or no. And after that, I have US CAD because I'm Canadian, and I have Mexican because I'm looking if there's any kind of trade deals with NAFTA. So it's easier for me to see if quickly there's correlations with that and the DXY. So I just wanted to say like that because most of the time people ask me what I'm actually looking for. I'm actually not even looking at the charts most of the time. I'm actually looking at those numbers here, just to see how those correlations are moving. If I see any kind of anomaly, and if any of those numbers are telling me that we're going to have a reversal in one asset class. So I have those here. If I see like one of those moving in a certain way, and let's say I have like Dow Jones going up like 2% and Nasdaq's spider is not moving, so they're flat for the day, but this one is up 1% or 2%. Well, in that case, that would be pretty weird, right?
Mm-hmm.
So there would be some kind of trade to do maybe between long spider and maybe short Dow. And I would just look at technical levels in like a case. And I just want to point something out quickly here because it really helps my trade with the silver and all that stuff. I have other stuff I'm looking at too. So I have all of those stocks I'm looking at, all the one with the little ticker here or my mag 7. So that's what I'm going to look at here. And after I have my indices, so this is all of my my international indices, which I always look on a daily basis before taking any trade, just to see what's the risk appetite and equities around the world. So I have the J225, which is going to be Japanese. This is China. This is Germany, and this is going to be the FTSE, which is going to be England. So I always look at everything, and that's the stock 600, which is all of Europe.
Mm-hmm.
So just wanted to point that out because I think it's important just to have a global picture before taking a trade. So the trade I took here on silver was actually timing and technical and fundamental ish. So fundamental on silver is actually pretty bullish right now. For the same reason as gold since last year. I mean, the metals have been pretty bullish. Why is that? I think it's mostly because of all the money that was printed in the last few years. Second of all, you have a lot of de-dollarization of the system. A lot of people are trying to remove dollars. And you have BRICS. So the countries of BRICS were loading up more and more position in metals recently. And the thing that's intriguing with silver is that if you remember about a week ago, CME group went down. The
Mm-hmm.
CME servers went down in the morning. That silver popped.
Oh
And at the
yeah.
the same day, you had JP Morgan trading floor that's saying that they were going to move their silver and precious metal operations overseas, I think, to their Singapore Hong Kong office. So all of that sounded pretty weird to me. Just said that okay, maybe silver is actually a market that you do really want to pay attention to right now. There's probably some kind of manipulation or whatever happening. I think silver is actually super bullish long term. But technically, right now, I think it's too bullish. Okay. And why I say that is that you have FOMC this afternoon. And my view is that if you're long that metal right now and you have potential risk this afternoon of having hawkish comment from Powell, why would I want to keep my full long exposure on silver or any metal? Because I know metals are going to be very sensitive to the yields and are going to be sensitive to the US dollar. So when I saw that silver was pumping over 60s, I used a lot of those psychological levels on metals, especially those big round numbers, because when you're at CNBC, they're not going to talk about $59 an ounce or whatever. They're going to talk about, oh my God, 60. Well, it doesn't change anything, but
Mhm.
mentally speaking, it's just such a nice number that people are going to pay attention to it. So when I saw 60 yesterday on that level, on that metal, I was like, oh, it's probably going to push a bit higher because there's going to be a lot of people trying to go short at 60, which actually it did. And if you look at the technical here, okay, so I do use channels like that just to see uh, the range that we're in. This channel is actually my friend. So we have like a little running trading group here in Montreal, and so he's the one who actually showed me that channel. He was like, "Hey, look at this," uh, and he's right. He was right. Actually, we were pretty much on the money on that part. So what I do after that is just typical easy trend line, just reach those levels. After I use a lot of the fibs. I love fibs, especially when we're doing all-time highs. I look at extensions. So when I saw that extension here on the 61.8, it was like, oh, that's probably going to be a good level with those lines lining up. So what was interesting is that I took that short on the FTMO here. I took that short, very small risk on that one because uh, it's kind of scary when NASA goes up that quickly. The spread sometimes they just jump. So I didn't want to get wicked out by the spread, which is actually normal. I mean, when you have so much volatility, the spread can go up pretty quickly. So I was pretty safe on this one. But 61 fib for me, that was the entry point around that. And the thing I was paying attention to is also gold. Okay, so why is gold not going any higher, and why you don't have any buyers on gold when you have silver pumping so hard? To me, that didn't make any sense. And the question also is that knowing that we have FOMC this afternoon, is it logical or is it actually smart for traders to stay long or do price discovery just before that meeting? To me, I was like, oh, there's going to be probably a lot of traders just trying to edge their bets here, trying to edge their longs. So in that case, that should actually make some short to medium term selling pressure on the asset. So in that case here, that's what I was using. So, you know, very easy the way I use technical analysis. I'm going to use support and resistance. In that case here, there's not that much support and resistance because we're really more on the price discovery. But if you go on lower time frame, I go in 30, sometimes 15 minutes, but most of my analysis is going to be on 4 hour, 1 hour, and daily. You do have like a typical kind of head and shoulder here, which is pretty good to see. And I do use RSI, but only for divergence. Okay.
Mhm.
And what I want to see is mostly when we have head and shoulders like that, that divergence, I want to see a lot less buyers on the last shoulder before we dump, which is exactly what you see in that case here. Okay. So what I've seen so far is RSI is a great way of seeing, in my view, if there's like any kind of market structuring by algos. So what I've seen when I was working in different firms before is that when you have a huge position, it's impossible to close that position in one click because you're going to be too heavy and market participant are going to see that you're trying to unload your position. So what you're going to use sometimes it's called like a layering system, algorithmic layering. And you're just going to structure these positions in a certain way that the price is going to stay pretty much stable but you're going to have less and less buyers. So
Mhm.
that the way I've seen that when you have distribution or accumulation is just really through that RSI when you have those lower and lower buyers and you have that structure that stays pretty much the same. So right now you see I was in that position. I can tell you just the price exactly just uh, so that was on a 200K account FTMO. I took a position entry price at 61.38. 61.38. I closed it at 60.86. So you see, it's not much. It's like 50 cents I went to grab on that one, which is actually not much. The reason I didn't want to grab too much is just because uh, first we have like FOMC this afternoon. I don't want to be stuck in that trade, especially during that kind of news with silver. I think it's going to be insane. It's too dangerous. So that's why I just went for 50 cent. Maybe I'm going to look at it more precisely this afternoon to see if there's maybe some swings to be done in there. But for now, that's the trade I took.
Mm-hmm. Yeah, I got it the same way. Like whenever there's big news coming up, I just prefer to stay out of the market because the market usually is really behaves in a different way than in the previous
Yeah.
days. Do you have any favorite Fibonacci levels that you are relying on the most?
Yeah, great question. Uh, so yeah, what I do actually is that I love all the levels I showed you. I show you are the ones I use, but there's ones I actually don't use that much. I still don't know why I keep them on my charts, to be honest. But sometimes humans are just weird. It's like the 23 year. I never use it. I don't know why it's still here, but I never use it. The one I use mostly it's going to be 38. 38 I use a lot. 50, 61. 78 I use a lot. Between 78 and 88 I use when price arrive there very quickly. So those level here, those 38, 50, and 61, I don't mind if the price just wicks around a bit that level before moving in the other direction. But that 78 or 80, between that level here, I really want the price to go there very quickly and bounce super hard. Because for me, it's like, oh, maybe I don't want to catch a falling knife. So the price action has to be really, really quick. And when I use fibs, another point I would mention out is you really want to see those fibs align with some like price action. Okay,
Hmm.
so let's say I put a fib. Uh, let's say I put a fib. Just let me check if I can actually find one. Is there anyone I can? Okay, let's see if there's something to be done here. Okay, so let's say I talk about that fib here. Okay, so let's say I want to look for potential short. Okay, I'm not gonna go in fundamental on that part. I'm just trying to give an example. Like the 50 year, you see, the 50 year, I wouldn't even consider because last time we went there, the price, the most recent price didn't even bother that level. So for me, that the odds of this level actually working according to my strategy is very, very low. But if I use the 61 that I see some wicks here at the most recent price, I love a lot. So
Hmm.
for me, this level here would probably be a level that I would look for more confluences. So I use confluences most of the time. I'm going to use trend lines, moving averages with fibs. I'm going to look for 2 to 3 confluences with that fundamental. If the fundamental part is very strong, I won't pay as much attention to the confluences, and I'm gonna have maybe a bit more of a relaxed entry, less, let's say, precise, but I'm gonna have a bigger stop loss in that case.
All right. So once you figure out where your take profit and stop loss is gonna be, which again I assume you'll use the confluences that you just described, the fib, the price action. Do you do any trade management, or you just set it and you just don't want to touch it?
Yeah, that's a great question. No, I do a lot of trade management, sometimes maybe too much. But what I do is that I rarely, almost never, only get one position. I use one first position I'm going to open, and then after I'm going to open a second one pretty quickly, depending if I see that there's interest. So every time I have those levels, especially when it's the very like those kind of levels, I want to see like some sellers kicking in very quickly. So I'm gonna go after on like the 30 minutes, under 15 minutes, and I'm gonna look at those technicals here. Is there any like kind of orders? Because at the end of the day, when you're looking at those technical levels and all of those confluences, the way I see it is that okay, if there's an algos are able to program these parameters in their system, or let's say there's going to be some different strategies that those kind of confluencers are going to be, in my view, some exit points for those guys. So where they exit, this is where there's supposed to be some liquidity, in my view. So that's where I want to really enter and I want to see some action. If there's no action at all, it's probably because that level, I'm the only one thinking that's going to be an important level.
Mm-hmm. All right.
Yeah.
Well, let me just quickly summarize the strategy in 30 seconds. So, I'm sorry for that. So, you mainly look at all the different markets to see if there is any, let's say, unusual thing happening. And with the fundamentals, you then decide what is ultimately the trend. And then, whenever you are entering the exact position, you're using the confluence of Fibonacci, of the price action, of support and resistance, and that is pretty much it.
Yeah. So just, I can give you another example. There's a trade I was talking with
Mm-hmm.
friends this morning. It's this one year. So you see, I've been bullish on like crude oil for a few weeks now because I think of the Russia peace deal. Like, I don't know if that's going to end well. I feel like there's good intentions, but there's not going to be any peace deal anytime soon. And I feel like Europe is, I don't know. I feel like there's bad things going to happen.
Yeah, that
I,
makes two of us who think that. So
yeah, yeah. I think like there's, I don't know, and they have like an opportunity to have something good, and I feel like they're gonna, sorry the word, but fuck it up. So uh, I don't see why crude oil wouldn't go any higher from here. And this morning I was talking about that level with some friends here, is that you see that trend line here, that fib 78 and that little zone here. It's a very dangerous zone. I mean, it's not very high quality for me because the confluences are not very aligned. But fundamentally, I would be very surprised for the price to go lower than that trend line. And what I've realized is that third touch on trend line are actually very, very strong for execution.
hmm
And that's another point I can say quickly is that I use trend line two ways. Third touches on trend line are only going to be for execution. After three touches, I don't use them for execution anymore. It's only for trend following and knowing if the news are still making sense for the price to go up in that direction.
okay, yeah, that's a nice rule of thumb. How about the risk management? So, do you have a strict saying that you only risk X amount of percent per trade, or are you a bit more variable in that department?
Yeah, great question. Okay, so a lot of people ask me like, "Oh, Mark, when you started and everything," I would say, uh, when people ask me to start trading, I would say 0.75% is about proper risk management. Do I use that nowadays personally? No, I tend to take a bit more risk personally, but I think it's just because I have a bit more experience, just a bit more of financial freedom than before. So maybe sometimes I go a bit deeper, but I don't try to go any bigger than, let's say, 1 to 1.5%.
Mm-hmm.
That would be my max in my view. Yeah,
Yeah.
but after that, it's like just like I think we're gonna talk about psychology and all that stuff. But humans are just kind of a weird kind of breed. So even if you have all those rules, sometimes they can still trick you on. I think if you can add some tools, like there's tools I've seen on CTrader that you can add that can like automatically close positions if like let's say you make a mistake. I think those tools can be sometimes a good addition to risk management for a lot of people.
Mm-hmm. All right.
Yeah.
Well, thank you for showing us an insight to your strategy. And now let's take a look into the econometrics. All right. So let me start. All right. So we have an econometrics open here, and we can see right away this has been a pretty wild ride.
Yeah. Yeah. A
Oh,
terrible. Actually, it was a terrible ride, this one, and that's why I want to show this one because I think it's good and bad example at the same time.
okay.
Yeah. Uh, do you want me to explain what happened here, or what do you want to? How do you
Yeah,
want to do it?
yeah. Let's do it. I think that'll be the best.
Okay, so uh, I got this account, okay, with a really, really, really great start actually. So as you can probably see, the account went roughly to 46, and it should have been much higher, but I'm not gonna blame anyone. But there's someone actually around me that just really confused me with a view, and I was really bullish. Okay, so what happened here is that the market was we had like a correction in the U.S. stock market around like a 6 to 8 to 10% correction, and I was really really bullish because I was like fundamentally speaking, uh, the market is really bullish and we shouldn't go any lower. So I was pretty much swinging those trades, and this is how I got to a very very high amount of profit quickly because the market was just moving quickly. Okay, it was just not. I wasn't over leveraging or anything. It was just really big moves in the market in one direction. After that, what happened is that one of my friend, which I don't, and the lesson here is good, is just follow your analysis and don't listen to anyone else at the end of the day.
Hmm.
Uh, I don't know. I was getting confused that maybe that ride was a bit too strong and maybe it was time to short that market. So I closed all my long term bias that I had and I really decided to start shorting that market. And after that, I got really frustrated, honestly, because I was like, man, I was wrong. I was right. I listened to someone else for a reason I don't really understand, which is actually a rookie mistake. And I started just getting frustrated because I was not on the right side anymore. So the problem is that the market, the U.S. market, really started just pumping and pumping higher, and I was really trying to catch one of those little dips, but there was no dips. So that's how I eroded that much profit quickly. Uh, I would say, mentally speaking, honestly, it could be hard for a lot of people. I mean, it's not pleasant for sure, even for me. But I was like, I've been through that kind of situation before, and at the end of the day, it's just part of the trading
Hmm.
business, I guess.
We'll talk more about the psychology later, but still, do you think there's some ultimate advice that you'd give someone who's going through a phase like this? Losing a lot of money at in a single time, or do you think you just gotta? It's a painful experience that you just have to go through, and it's just something you gotta go through numerous of times before you actually learn how to handle it better.
Yeah, great question. I'll try to answer my best. So there's a few things I've learned. First of all, put things in perspective. Okay, I mean, on that account, you see, this is when I see there's a bit of luck in trading. Okay, because you can have a good strategy, but if you enter the good timing, like you got lucky because the timing was really good. I got lucky because the timing was really good when the this account started. So I was really in the momentum and market starting to break super high. Okay, so just take in perspective, like $46,000 US in like 2 days. Okay, roughly 2 3 days. I mean, it's an insane amount of money, honestly. Okay, but if you lose part of it, like, okay, 3 days before that, I didn't even have that money. So just think that trading, you're going to make some, you're going to give some back. You really have to be fully detached from it. And I think the most important part is that you have to be honestly financially kind of strong to accept those variation. Uh, I don't think it's mentally wise to trade if you're in a financial bad situation. I think trading requires so much financial, like mental strength, that if you don't have that financial cushion behind you, it's going to be pretty hard to maintain those patches that are going to happen sooner or later in the trading business. So that's would be one of my best advice. Just make sure that you're really well set mentally and financially before. Um, like, no, you don't have to be multimillionaire. That's not what I'm saying. I'm saying that you have to be just like, if you're like already financially stressed, why would you should try trade right now? It doesn't make any sense. Like, you're already stressed, and trading, as much as you want to we can say it's not stressful, it is a bit stressful. Okay, so I think it's just part of the game. And the best way I've seen to really use those emotions and to manage those emotions, it's first you have to really know yourself properly. So I sometimes teach about psychology on my my Instagram and all that stuff. And the tricks I give is that there's 5 phases to life I like to describe. If you really want to be a good trader, in my view, you really have to understand, one, you have to be mentally super strong. So look at yourself right now. How do you feel about yourself? Where do you want to how do you want to project yourself mentally, and where do you want to be? And what do you have to do to be there? So I did that a few years ago. That's actually what started making good results for me. And the year I really made some big money, the 25K to roughly 600K in 1 year. What I did is I divided my life in five spheres. The first one was really like, oh, Mark, this is where you are mentally right now. This is where you want to go, and what are the tricks that you can measure that you can use to go there. The
Hmm.
second phase was all about physical health. So I think physical sports are actually really important in trading. I mean, now it's winter in Montreal, so it's a bit more difficult to grind than before. But I'm a big biker, so I like road bike a lot of it. I feel it's a good stress relief. So in those situations, I feel like having a good uh, sport management routine is really key to filter that stress. And I think like trading is like being like a high performing or high achieving athlete. You're gonna have ups and downs, you're gonna have pressure, so just find yourself like sports that you like, that are gonna bring that stress level lower. uh, and after that, the third one is really having some good friends around you, some people who can bring you back to earth if you're getting a bit too, like, oh, I'm so good, or maybe like pump you higher when you're like anxious and stressed. So having good friends around you, I think having a good family really helps. Having people who just know you well and bring you back to life when it's needed, because trading is a wild ride. Uh, I've been doing this for such a long time now that I've been through ups and downs, and just having good friends around you is very important. And the fourth one is having just financial objectives. So if you have like a final goal, if you have goals at the end of the year, it is so much easier to have a plan. For me, that money was extra money. Honestly, that was not even part of my plan, to be fully honest. I mean, my plan for the year is already reached, in even more than that. So I call it the gravy money at the end of the day. So gravy money, maybe I'm gonna take a bit more risk because I'm like, okay, I've already reached my objective, but having that game plan of objective is really important. And I feel like having a clear vision of how much you want to make. And it's funny because most of the people I talk with that when they trade is like, what's your goal with trading? Make money. Yeah, of course you want to make money. Nobody's here to lose money, but like how much you want to make at the end of the year, what's your goal, are you going to track that? That's such an important part. And I think if a lot of people would do that, they would have much better results having like a roadmap. So most of the tracking I do is actually not in metrics here. Most of the tracking is with all of my because I have different trading accounts. So most of it is going to be through Excel. I'm going to have like, okay, what's the situation for this month? What's the situation next month? Where am I right now to where I want to go at the end of the year? So when you have that global picture is really good. And the the fifth objective, I would say, of those spheres that are really helpful is just treat yourself. When you have good results and you're proud of the behavior that you got, just treat yourself. So, like with this year, what I did is just like with that payout, I was like, hey, it's a good payout. Actually, it's like still in Canadian money, it's a lot more than that because Canadian, it's the Canadian pesos, we have so no value here. When we go in Europe, we're getting robbed because it's so cheap. It's just the worst currency ever. Anyway, so it's just important to give yourself some gift. And in that case here, I just bought myself, okay, I bought myself a new computer, laptop. I have a really good trading computer, but my laptop was not good anymore. Bought myself a few clothes. So I think it's important to anchor those good behaviors that you use to trade and go get those results. I don't know if that helps a bit, but those are, I would say, the tricks I use normally to just manage that financial, that you can have those highs and lows and just have a long-term picture, not get so frustrated with it.
Right. I think this is really, really a solid piece of advice, and I think mostly you can apply this to your general life. Like even if you're not trading, like
Yeah,
even if you do some other business, whatever
but
you do, I
yeah,
think these points that you mentioned were are exactly like a good way to remain motivated, remain healthy, and remain happy in life.
yeah. It's funny because most of the tricks I just shared with you right now are tricks I've learned from mentors I had when I was working in the financial industry, and just people who had really, really, really good financial success, like amazing. And it's not even regarding trading, it's just about life in general. And I think all achievers in life just have that really, really clear plan in their mind. Uh, and just be grateful at the end of the day. Being grateful actually helps a lot. And another trick I can give, that's one of the funniest one, but it really changes everything. If you wake up in the morning and you feel like you're negative vibe and you're like, ah, this life is bad, this, I have my girlfriend and whatever, I'm telling you, you're gonna have a terrible trading day. If you wake up in the morning and your life, you're like, oh, life is just amazing. It's great. I'm gonna have such an amazing day today. I'm gonna go smash those markets. Like just the way you perceive information, just the way you translate all of those ups and downs, it's gonna be so different.
Yeah, well, at the end of the day, you make your own reality.
Yeah,
So I do agree with that. I do have a few points. So when you mentioned the physical well-being, doing sports, I think if you're a trader or if generally you sit behind a computer at work for 8+ hours, I don't really think it's mandatory to any sports. I think. I'm sorry, I don't think it's optional. I think it's mandatory. I think you really need to do some
yeah,
sport. It's not if you want or not. You can do whatever you want, but if you're sitting for 8+ hours behind the computer, you really, really need to do something because it's like this obvious saying, but it's true. A healthy mind lives in a healthy body. So I definitely agree on that.
100%, 100%. Yeah, it's very important. You really want to have that sport aspect in your life.
All right. And the second point I had is that when you mentioned you should not really trade if you are not being, well financially, I've seen it also several times when people who were going to work and trading at the same time were doing really great because they knew they have this secure
Yeah,
money from work, right? So,
yeah,
mentally you are fine. You know that even if you have a bad trading day, you still have this money from work. And, after some time, of being successful, at trading and working at the same time, they quit the job, and all of a sudden, it's a whole different dynamic, right? You are
yeah,
now being, pressed to be successful in trading. Like, if you're not gonna be successful in trading, like you're not gonna be able to pay the bills, and that's a
yeah,
whole different situation you're putting yourself into. And I'd say you really need to, check twice if you are ready to leave the work and do
yeah.
trading full time.
It's that, and yeah, you're absolutely right because I did experience it with with myself when I quit my job, and I was I was pretty okay, honestly. Financially, I was really okay, but still, I was like, holy smoke, the difference, just the way I was trading changed a bit, and it took me three to 4 months just to adjust because it was just such a just a different perspective. So yeah, I think trading actually is a great thing to do when you have work. I think
Mm-hmm.
um, s- you can do it for sure full time, but it's a different perspective for sure.
Mm-hmm. All right.
Yeah,
Well, thank you for the conversation, and let's finish our little interview in the final psychology part. All right, so let's finish today's interview in the same manner as we were actually going on for the past few minutes, and let's talk about the psychology. We were just talking off camera how important it is, and we're saying it pretty much every time. Do you think you could pick out like one single thing psychology wise that you had the biggest issue battling it?
yeah. Well, trading, it's a different business than most businesses. I mean, if you're bad at content or if you're a bad lawyer, yeah, you're not gonna make much money, but you're not gonna lose money. Okay. So trading is just a different vibe when it comes to this. You have to accept that losses are just going to be part of the game. So the way I see it is that when you put everything in Excel or just you have like some trackers and you have that global vision, that's where you're going to see that's like I think of those losses as just like business expenses. So think of a startup, just think of running a business like a construction business, for example. Okay. You're going to have 10 to 15% margin at max on a construction business in Canada, at least. Okay. Maybe in your country it's different, but in here it's going to be this. So most of it is going to be expenses, you see. So uh, I think just being good at trading is being an entrepreneur in a certain way because you're going to have to manage a lot of different aspects that you don't have in the corporate world generally. And you're going to be challenged through yourself. So it's going to be you over you. So just having that entrepreneur kind of mindset, that vision is very important and it's going to help you a lot. So every losses I have for me is just like an expense, nothing more than that. And also, as I we said earlier, can we just got 1 second?
Yeah, sure.
Yeah. The part about the five spheres, are we gonna put it the one before or no? Or it's
Uh,
gonna be cut?
the part about the five.
That we were talking about, like the physical and all that
Oh
stuff.
yeah,
You want
yeah,
to
yeah,
repeat it?
yeah, yeah. I mean, everything up to the part when I said, okay, now let's talk about the psychology. That's
Okay,
already at the
perfect.
end.
Yeah, perfect. Okay,
So yeah,
good. Okay, yeah, okay, good.
cool.
You can
So
restart.
yeah, let's start over again.
Yeah,
Okay.
restart from the beginning of psychology.
Yeah, I would say so. Let's make it
Yeah,
easy.
perfect.
Yeah.
Yeah, okay. I have something better to say anyway. So,
All right. Awesome. All right. So let's finish our today's interview. Well, shit. Let me start over again. Let me have a little drink.
yeah,
Mhm.
yeah, there you go.
It's already 7 p.m. here. I had a long day.
Yeah, no, I get you.
All right. Okay, and let's finish our today's interview talking about the psychology as we did for the past few minutes. So Mark, do you think there was like one single biggest thing you had the biggest issue battling? Some, whether it was like overtrading or whether whether you were really feeling down after losing a position. Was there any one thing that you could pick out, or was it just like a mix of everything?
Well, yeah, that's a great question, actually. I think it's a mix of everything. There's nothing specific, but there's one trick I did realize that helped a lot, and it's just having some pending orders. Okay, so if you feel like, uh, because there's two different profiles. There's profiles I've seen like psychologically that they can like just be in front of the screen and just relax, and there are other people that just like to really kind of panic when they're in front of screens. So in that case, in my view, what I feel like it's what I've seen is the best thing is just having limit orders. Limit orders is just like you really have to trust your strategy. You really have to put that stop loss in and that take profit in, and you're just not going to be like emotionally attached to that trade because that trade is already printed in the system. So this is one of the best approach I've seen so far to remove that emotional damage if it's too strong for you. The second one is just putting alerts or putting way lower kind of lots. I mean, a lot of people are having way too big position. It's like you have like two different kind of accounts. When you go with FTMO, it's like you have the normal one and you have the swing one. Personally, I feel like if you have the normal one, you use all of that leverage, just like man, you're not going to sleep well at night. It's a lot of leverage. So just knowing what you're feeling comfortable with, the kind of right positioning for you is important. And for some people, making like $500 at the end of the month with trading is going to be amazing. Okay, that's going to be like their comfort spot. And for some people, that reaching that 10, 20, $30,000 limit at the end of the month is going to be their comfort zone. So it's not about only skills, it's about capacity of seeing numbers too. And a lot of people I've seen, like, not everyone is meant to have the same capacity of taking big trades or handling that much money. I don't know why. It's just very important to stick what you feel comfortable with. And once you've reached that level so many times, that's where normally you're gonna start pushing maybe a bit more your boundaries to the next level. Because when I started trading, I was making like $300 a day. I was like, holy my god! I was like, man, that's amazing. $300 a day. I was like, that's just like crazy. It's so much money. Now I'm like, I can have like a trade of like 5K, and it's just it goes in one ear, goes out the other ear, doesn't change anything for my life. And it's just I was realizing that last time. I was like, oh, it's so incredible, like how my perspective about money change. And I think it's just time. So give yourself some time. My best trick here is just like learn that there's a learning curve. It's not because you see people online making so much money that you're gonna get there from day one to the second day. It's just there's a learning curve to everything. And I think the psychological learning curve is very, very important. Is just letting yourself time to build that emotional grit that it
Mm-hmm.
takes to build those big numbers.
Mm-hmm. Yeah.
So that would be a big trick for sure. And there's another one. That one is a bit tricky to explain. It's a really good one. I use it more in personal accounts, but it does work sometimes on prop firms too. Uh, it's just splitting your month in two pieces. Okay, so let's say I have like a 10% objective at the end of the month. A lot of people I've seen that they're like, oh, if you reach your objective for the end of the month, you're like, well, just take it out, take it easy, just go chill at the beach. Personally, I don't do this. I do the opposite. If my objective is reached the first week of the month, I'm going to push even harder. I'm going to take a bit more risk because I know, statistically speaking, my strategy should give me, or I should have that kind of result at the end of the month. But now I already have it. So I'm going to increase a bit my lot size. I'm going to take a tiny bit more risk for the first part of the month. So the first half of the month. And if the second half of the month I'm still higher than the objective I gave myself, I'm going to keep that strategy with more risk. In the other way, if that first part of the month I use more risk and I re-go to, okay, let's say 80% of the objective I gave myself at the beginning of the month, I'm going to re-go to that same strategy I had before.
Mm-hmm.
So the what I've realized is sometimes trading is having momentum, and sometimes the market are just really good with the strategy that you have. And when those markets are really aligned with your strategy, for me personally, it's really time to press on the pedal and just like go extract as much money as possible. And knowing the months that you're bad at trading is just really important psychologically. So for me personally, September and October, absolute disaster. I don't know why. For 4 years now, I'm always losing money. So I told my friends, I'm always going to go on vacation. I'm going to go the four season if necessary. It's going to cost me less money than trading. So just like treat yourself when you know that it's not a good month for you. And I think psychologically speaking, it's just really important to know when you're strong and when you're bad.
Mm-hmm. All right. Yeah, and this is again I see connection to sports as well. That when you have a good season, when you're getting good results, that's the time when
Yeah,
you should like really step in and milk out the most, of course, while remaining cautious about the risks.
yeah, for
Um,
sure.
I would also like to touch upon another thing that we discussed before, and that I think is really important, and that you mentioned that it's important for you to have a goal set, like for the like a yearly goal, or generally to have set a goal for your trading results. And I think it's similar like to life as well. Like I think like in your life you should always like have a goal, have something you aspire to, because
Yeah.
it essentially uh, their energy is then centered to something to one thing, and it allows you to move forward. So how important would you say it is to have this sort of a goal in trading? And maybe could you give me a little help with setting the goal? Like what's the way you do it? Like do you just set like, okay, I want to make like this amount of money on monthly basis, or is it more complex than that?
Mm, it's a great question. I mean, to be fairly honest with you, I think some of those aspects have changed with me with time. Before, when I really started trading, it was really more. It was not about the money as much. It's never about the money, but before I used to track a bit more when my stats than I use now. Okay, so it's gonna sound funny when I'm gonna say it's like I was like trying to present my results to like a portfolio manager. So every time I was trading, all the trades, I was like, okay, I have to be proud of sharing those trades online. So I did that for roughly 24 months, but it's a lot of energy, it's a lot of concentration. And every trade, everything was tracked and it was all about win rate and risk reward. So I really wanted to have like that beautiful P&L at the end of the month with very, very low drawdowns. But you see, like now, as much as I think this is one of the best tricks, personally, sometimes I do not apply that thing as much as I used to do before,
Mm-hmm.
maybe because of just experience and just like flexibility. But I think honestly, it is one of the most important aspect. Uh, and it's funny you say that because like this Friday, I'm planning my 2026 year. So I'm gonna plan all my year right now on all aspects of life, and I'm taking a day off just to do that. I'm just hiring a coach in the US, and just like a person sold a company for multiple nine figures. So it's a guy with a lot of experience, and I think just having that that plan is very important, and I'm gonna tackle all of those aspects that I'm proud and not proud of, and I really want to improve. One of them is probably the thing about the presenting your results at the end of the month. I think it's really important. Uh, and yeah, so that's important. And the other part I would say about the objective is it's not because you put yourself an objective at the beginning of the year that you're going to keep for 12 months that this objective is actually the final one. Okay, so what I've realized that like business planning, I feel like it's people do like, oh, new year, new resolution. So they plan on first day, they never open it again. And after 2020, the end of the year is there, and you're like, oh man, oh, that's what I wrote at the beginning. So what I prefer to do is that I do a monthly update on those objectives. And if I see that the first month of the year, I'm already more than that percentage I'm supposed to be. So let's say that 8 to 9% of where I'm supposed to be. Let's say I'm already at 20%. Why should I keep the same objective at the end of the year? It doesn't make any sense. I'm already more than double where I should be. So I'm gonna push myself even more. And I think human nature, from what I've realized, is that you always need those new objectives to keep yourself like with the very high mindset of like having to achieve something that
Mhm.
pushes you out of your comfort zone.
Yeah, yeah, I couldn't agree more. Right.
Yeah.
Well, Mark, thank you for the interview today. It really was a pleasure to talk to you about a trading. And well, if you have anything you want to say, any last words
Yeah.
before it's over,
Well,
that was our time.
if you you want if you speak French, we'd maybe translate those videos. I have a YouTube channel. We talk about stock market in general. It's called Investi. I'm on YouTube too. I talk about all the tricks I've learned on trading. It's free content I do, and so you can follow me online or whatever. It's just like free content I do on trading at Marc Dargis. Yeah.
Well, and that's FTMO.